Thank you for joining me. I'm Alex, and I want to talk about an oil company for the first time and probably the last time. It's mostly because I fundamentally don't believe in oil companies. I mean, I know they exist. I just really don't think that they'll be good companies to invest in because obviously the whole oil thing is going away sooner or later, and I'm counting on sooner. So what we had today was a bit of a sale going on, continuing the sale that's been going on. So stocks are down quite a bit, and the oil companies themselves are kind of at the forefront. So we're down 52% today. Not great. Not a great day for a stock, and obviously not a great day if you own these shares. But obviously, when something goes on sale, I think it's worth to take a look and see if it's worth buying, especially a sale of 50%. I mean, 50% off is a great deal. So market cap $11.2 billion, share price currently $12.51. Dividend yield is 25.26%. So obviously not terrible. You can get a lot worse out there. Just to put that into perspective, before they dropped 50%, obviously the dividend yield was like 12-ish%. And 12% is also a bit high, especially when you consider the earnings of being negative in the first place. So revenue $20.4 billion, up reasonable amount. No, 20% or so. Earnings negative $667 million, down from $4.1 billion. Now, obviously, $4.1 billion would be a lot better, and that would actually cover the dividend. So PE of negative 10. So right now they lose about $1 per share, and they pay another $3 per share in dividend. So overall, that's about $4 per share, almost $4.50 that they're spending, and they're not really making enough to cover that. So forward PE of 34 would also obviously not cover the dividend, and obviously I don't know what share price that PE is based on and if it's up to date, but I don't think it really matters all that much. Total assets $109 billion, up 150% from the previous year. Total liabilities $75 billion, up 400% from 300%, 200. Which gives them total stockholders' equity of $34.2 billion, which is up $10 billion, which is actually not terrible, quite obviously, and significantly better than the earnings of the previous year. So overall, obviously, passing up a company with 25% dividend yield is a bold move, I would say. But I still don't think that I would buy this company. So let's assume that the forward PE of 34 is correct. They would have to have a forward PE of 4 to be able to pay the dividend. Currently, they have enough money in the bank to pay the dividend, and they might for a couple more years. But I don't think that the whole ratio is going to stay the same. And I don't think that they can really survive if there is a price war breaking out, as you can see right now, and that's the reason they dropped. Saudi Arabia can produce oil far cheaper than pretty much anyone else. Russia can produce oil fairly cheap. The US cannot. So overall, I would say that companies like Occidental and Exxon and stuff have to produce oil at a higher price than they can sell it for at this point. So obviously they're going to continue doing that for as long as they can and hope to ride it out. But if there is no deal being made that leads to supply cuts, that stabilizes the oil price at a far higher level than it is right now, this is not sustainable. So assuming that there's not going to be a deal between Russia, America, and Saudi Arabia about supply cuts, really just Russia and Saudi Arabia, the US doesn't really get involved into the talks there. There's going to be a lot of petroleum companies just going under because they cannot produce oil at a price that they can sell it for. And obviously when you cannot produce something at a price that you can sell it for, you cannot last for too long anyway. So overall, I'm going to pass up the 25% dividend. I wouldn't really mind gambling and picking up a few shares at $12, but I didn't invest in oil companies because I don't see that as a sustainable business model, and sustainable is kind of the idiotic pun in there. But if you're into oil companies, as Warren Buffett apparently is, I think that we can treat this for now as a speculative investment and maybe pick up like a 1% stake, 1% of your portfolio, and gamble on whether or not you can get this kind of dividend or if the price can go back up, and kind of just write off the money. And if you get something back, it's good. If you don't, you just written it off anyway. I personally cannot advocate for gambling, but if it's a tiny enough amount and you can deal with losing it just fine, I wouldn't really be against it too much. So I'm not going to buy it. I don't recommend anyone put a significant stake in this. Neither dividend investor, nor value investor, nor growth investor, especially not those, should be buying the stock at a significant stake. And if you want to gamble, I guess you can go for it. I just not sure what the outcome is going to be. That's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.